And my view is this space goes from 2.5, 3 trillion now. By the end of this cycle, it's 10 to 15 trillion. By the end of, let's say, 2032, just extrapolating the normal log trend of this, it's $100 trillion by 2032. That from here is $97 trillion of wealth that is going to come. This is the largest, fastest accumulation of wealth in all recorded history. It's that moment that crypto tends to go vertical. And it's very cyclical. It's driven by this macroeconomic forces of this debt refi cycle. It affects all the asset prices over the time. But crypto is the one that goes truly bananas.
Despite facing challenges in 2023 due to global economic conditions, the market has demonstrated resilience and bounced back strongly. While inflation didn't directly impact the previous slump, other macroeconomic factors played a significant role. However, recent developments, such as the approval of Bitcoin spot exchange-traded funds by the U.S. Securities and Exchange Commission and the upcoming Bitcoin halving event, have injected substantial investments into the market, bolstering overall sentiment. The global cryptocurrency sector grew 20% in May 2024, adding over $420 billion to its market capitalization. Raoul Pal predicts that the cryptocurrency market, valued at $2.5 to $3 trillion, could reach between $10 to $15 trillion by the end of the cycle, around 2032. Extrapolating based on historical logarithmic trends, he estimates it could hit $1 trillion by 2032. Arthur Hayes also weighed in, saying, "If you believe that central banks and governments are in debt, will continue to be in debt, will continue to print money, and will continue to hand out welfare to buy votes or support from the population at large, then crypto is the answer." Cryptocurrency heavyweights. Arthur Hayes and Raoul Pal are setting the stage for the upcoming bull run. Since its inception in 2009, Bitcoin has attracted tech enthusiasts and investors alike, often making headlines with its dramatic price movements. Its journey from trading at just $1 in 2011 to surpassing $73,000 by 2024 has been a roller coaster of meteoric rises and significant declines. In total, Bitcoin prices gained 5.9% in May and are now up more than 60% year-to-date. Ethereum prices also gained more than 17.1% in the month and are up 64.1% overall so far in 2024. As the market prepares for the next bull run, Hayes and Pal's insights provide a roadmap for investors seeking to capitalize on emerging opportunities. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
And my view is this space goes from 2.5, 3 trillion now. By the end of this cycle, it's 10 to 15 trillion. By the end of, let's say, 2032, just extrapolating the normal log trend of this, it's $100 trillion by 2032. That from here is $97 trillion of wealth that is going to come. This is the largest, fastest accumulation of wealth in all recorded history. Let's assume I'm a total moron, which is a good thing to do, and I'm wrong by 50%. It's still a $50 trillion wealth accumulation. That is the entire history of wealth accumulation of the S&P 500 and its market cap. So the amount of wealth that's going to get generated is going to get recycled into the space. People will buy high-end property in nice places, but a lot of people in this space won't go outside of this space, and it gets recycled, whether it's VC, whether it's the opportunities of building the applications layer, but really people seek trophy assets. And so I've just been buying as much trophy assets as I can for a kind of long 10-year time horizon, because I think this is the last chance you'll ever get to buy this stuff at the kind of prices it is.
I mean, it's pretty simple. Like, everyone knows what they should be doing. Obviously, we all never do it because it's, fun to YOLO some bullshit. But at the end of the day, it's very, very simple. If you believe that central banks and governments are in debt, will continue to be in debt, will continue to print money, will continue to hand out, welfare to buy votes or support from the population at large, then crypto is the answer. Obviously, Bitcoin's the OG thing, and I own a lot of Bitcoin. And then as you move up the risk curve and hopefully up the potential return curve as well, then you get into the shitcoin space. Obviously, the standout thing for Maelstrom, my family office this year, has been Athena, in terms of how amazing Guy and his team have executed on this vision of creating a synthetic dollar and displacing Tether USDC. I think that Athena now sits at about 3 billion-ish circulation, which puts it the fourth largest, if you want to call it, US dollar stablecoin thing that we've done as a fund. this cycle. And I think that we're only getting started in terms of the impact that Athena is going to have on the ecosystem. And then probably number two would probably be something called like EtherFi and the whole liquid restaking token ecosystem. Obviously, EigenLayer is going live later this year. We have a bunch of other plays in that sort of vertical as well. So I would say those are the two things that are standout highlights for our portfolio so far this cycle.
Investors have already flocked to Bitcoin and other cryptos following January's SEC approval of the first spot Bitcoin ETFs to trade on major U.S. exchanges. However, regulators continue to target the cryptocurrency industry by taking on crypto exchanges. The legislation, which was provisionally agreed by negotiators in June 2022, aims to ensure that crypto transfers, as is the case with any other financial operation, can always be traced and suspicious transactions blocked, according to a European Parliament press release. Hayes highlighted a concerning scenario where banks, driven by regulatory requirements, custody massive amounts of crypto with minimal security measures. Meanwhile, Raoul Pal pointed to the concentration risk within the crypto derivatives market. He observed that a significant portion of the market is handled by a single entity, Deribit. Now, let's redirect our attention to a video.
But 90% of the entire option market is at Deribit. That's the entire option market of crypto, billions and billions of dollars. There's a risk there. There's a risk there because the amount of people who use that one counterparty as the centralized place for options, all the OTC options get laid off there. So that's another risk factor. We need more option houses, some exchanges, platforms, everything, just to stop concentrating it, because there's a lot of use of derivatives now in that part of the world, and we don't know who's going to end up holding the baby when it blows up.
And on the options front, something that I kind of want to experience a little Schadenfreude is so if viewers are familiar with zero-day options, which are the most popular traded instrument in the U.S. Funny enough, the CBOE resisted launching zero-day options for many years because they could not get to a point where they could real-time margin people who write options. Now, if you understand, when you write an option, especially a call option, you have infinite loss potential on the upside. So what do they do? Under immense pressure of the brokers who wanted to launch these products because they're immensely profitable. And so if you are an option writer, if you're a Citadel, a Virtu, one of these big market making firms, you post zero collateral intraday when you write zero-day options. Zero. They have no concept of intraday risk at at CBOE. So imagine if you put a Bitcoin or an Ethereum ETF zero-day options on it, and Bitcoin spikes 50% a day because whatever, I don't know, something happens, and all these guys, and obviously the retail is going to be long volatility. The dealers are selling it to them at very expensive prices, but on this particular day, market gaps up, and you get scorched on your Gamma and your Vega. And all of a sudden, Citadel's down $30 billion, right? And they don't have it. And not only that, everybody else is down as well. And if you've dug into I have actually never released this essay, but I did a lot of research on all the major exchanges in the U.S. and their clearinghouses. They are woefully undercapitalized. It wouldn't take much to essentially bankrupt the entire U.S. financial system if they onboarded an asset that could move that they couldn't stop, which Bitcoin or some of these other assets. So that's another interesting risk in terms of a market event that could happen as we've integrated TradFi, which doesn't understand risk because they've never had to actually experience it because of central banks. And there are assets that are traded around the world that understand risk because they're essentially this long volatility instrument.
These aren't predictions, just so everybody's clear. These are identifiable risks that people may not see. This is not, because I know what the internet's like, this is not Arthur and Raoul saying that they're going to go under. It's like, no, these are pockets of risk that we can see that could be systemic. Because somebody at the end of the cycle will blow up. We just don't know who it is. Yeah. And it's always for the same thing. You try and add leverage to a 70% volatility asset, you will always blow up. 100% guaranteed. You just don't know who it's going to be.
The cryptocurrency market has heated up at the start of this year, leaving many investors unsure about what crypto to buy now. One major cryptocurrency market catalyst in June could be the Federal Reserve. In addition to announcing a decision on interest rates at its meeting that concludes on June 12th, the FOMC will also be providing updated long-term economic projections, including its expectations for how many interest rate cuts investors can expect in 2024. Are you adjusting your crypto portfolio in anticipation of potential interest rate cuts in 2024? If so, how? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.